Hello and welcome to this special show. Today we're in conversation with Ritesh Tiwari, the Chief Financial Officer for Hindustan Unilever, and we're here to talk about consumption and the FMCG industry. We're going to be talking about the recovery in consumption, rural demand, and what each category for HUL has been performing like. Ritesh, thank you so much for speaking to CNBC-TV18, and what a pleasure to have you in one of these very rare interviews. To start off with, we've seen a recovery in volume, even though it's just starting off. Even from a margin point of view, growth is also slowly coming back, is what you and all the other consumption companies are also saying. I wanted to understand from you then, is it safe to say that going forward, we're probably coming back to a normal growth cycle for HUL and for the FMCG industry?
Yeah. So let me just add, Shilpa, 2-3 different perspectives. For FMCG business overall market, long period, look at last 5 years, 10 years, 20 years, growth typically comes 2/3 from volume and 1/3 from price.
Yeah.
Given the amount of inflation that we had seen for last 1.5 to 2 years time, growth has been led by pricing. What will change going forward as commodities are tapering off? We are seeing sequential declines as well in many large commodities. Price will taper off, and going forward, the growth will be volume led.
Right.
Now, what is happening in this transition? If I look at last year, financial year 22-23, for FMCG industry as a whole, industry grew at 8% with a negative 4% volume, which means there was a 12% price increase which was there. If I look at last quarter, March quarter, again FMCG market growth, market grew 11% with flat volumes. So exactly to your point, volumes have recovered from the lows which we had at the peak of September quarter last year to the latest quarter market data showing as a flat volume.
Yeah.
Within that, if I tease out urban and rural, within the flat volume, urban is growing by 3%, rural is still declining by 3%. But the way we see this point in time, that the entire slowdown that the FMCG had seen, especially in volume, that is bottoming out. Rural has also substantially recovered compared to what it was at a very high single-digit volume decline at one point in time. It's at 3%. So definitely we do see that the overall slowdown has bottomed out. The inflation reducing is indeed helping market growth at this point in time.
Right. The first point that you made on the rebalance of price versus volume, that's actually my next question. Earlier, traditionally, I think about 65 to 70% always came from volume growth.
That's right.
When do you think going forward will we see this sort of a balance coming back? Not a balance, but this ratio coming back where about 1/3 is price, but it's largely led by volume. Yeah. Is it easy to say when?
Yeah. So good news which has happened that commodities from their peak have tapered off materially in some large spaces like palm oil, crude oil. Indian rupee has also been extremely resilient and firm this point in time. So we've not seen sequential inflation coming in, which is why, though the cumulative inflation has been significant, if I look at Hindustan Unilever, last 2 years we've seen 30% inflation. In a bucket of 2 years, that's completely unprecedented.
Yeah.
Now, this inflation is not going further. In fact, we are seeing some sequential coming off of few commodities. So the way we see going forward, the balance, as I mentioned earlier, we will start moving to a period where growth will be volume-led. Now, I don't see this point in time price getting in mix in terms of adding to the total growth. As you mentioned, 2/3 volume, 1/3 price. We spoke about it in the past. I don't see a component of 1/3 price into play for next few quarters at least.
Okay.
It will be by and large volume-driven conversation going forward. So it will be volume-led growth. And why I say that? Because number one, we had seen, as I mentioned, cumulative 30% inflation. That is coming off. But the impact on consumption is still there. When look at a consumer who's buying, when we end up making a price decrease of our products, it takes a little while before consumer gets to benefit that price decrease. But there's pipeline stock that retailers will have, consumers in their own house will have old price stock. There's always some lag between a price reduction benefit goes on in terms of consumption benefit a consumer takes, which is why there's some lag in volume recovery that happens. Second, as I mentioned, the cumulative inflation is still high.
Yeah.
Over a 2-year period. That still bites the consumers. The fact that it is not further inflating is really helping. So these two elements put together, in our view, typically volume recoveries will take some time, but growth will still be volume-led for next few quarters going forward.
So you're saying next quarter onwards, we can see volume-led growth already?
Of course, there'll be a balance for one more quarter, June quarter, but definitely as we move forward towards later part of the financial year, it will definitely be a volume-led business that will happen. It will take a quarter or two for it to further stabilize from the peak of 7% that we've seen in the recent period, but you will see that price growth tapering off.
Right.
So yes, in next couple of quarters, you will see volume leading price in terms of total growth composition.
So second half of this fiscal year.
Indeed. Second half of this financial year, you would expect growth to be volume-led.
Right, great. And in terms of rural also, we're seeing some recovery. The rural slowdown has bottomed out. That's what even Nielsen's data is also suggesting. But, we've had a heat wave, we've had unseasonal rains. We've seen that impact on farmers in certain states, especially even in Maharashtra, if you see, there was a lot of crop damage. And also this time, monsoon, there is still a chance that it could be deficient. So do you then see, how do you then see the rural growth panning out in the next couple of quarters? Do you think it's going to continue remaining under pressure?
So there are macro factors overall which are helping the rural consumption story. Of course, there's another important factor which is inflation. The point that we just spoke, inflation now is coming off from its peak. That is one more factor which is helping rural recovery. And that's a point we mentioned, that the rural slowdown is bottoming out. Yeah. From here onwards, few variables very important to see. What will now start triggering better version of growth in rural areas. So I guess we got to see how El Nino, the quality of rainfall, the quantity of rainfall, and the resilience of the rural infrastructure that we have in agriculture all play out, and we will hence have a little better read in few months' time what happens in terms of overall impact to agriculture, weather and monsoon related. In the times that we're in today, when disposable income have got hurt, of course the poor have got more hurt. And which is why at this point in time, urban markets are showing better resilience compared to rural market.
And want to talk a little bit about inflation and related to that. Now with inflation cooling off, last quarter we've seen some grammage increases and price cuts that have been taken. Is it safe to say that price increases are behind us, and will we see more benefits of inflation and the commodity prices cooling off being passed on to consumers?
At an aggregate level, answer is absolutely yes. So let me just give 2-3 category examples, Shilpa, out here. Where we saw highest amount of inflation impact was in skin cleansing, the soap business. We saw second important and large impact coming in laundry business because of crude oil. And I would say +1, and the reason I'm saying +1, I'll come to it, which is hair care, where same palm oil, derived alcohol and derived basically SLES goes in making shampoos as well. So we did see impact coming on hair care as well. Now there's a meaningful correction which has happened in skin cleansing and in laundry in terms of commodity. And which is why in these categories we have taken price cuts. Equally, in many places we have done volume increase, either giving a soap free with a bundle of soap or adding more grammage to an existing soap, or for that matter adding more powder to a pouch of laundry. So that has happened. In terms of hair, when I look at bottles, hair bottle prices have been intervened. We have decreased prices. The net price the consumer pays for buying a shampoo bottle, we have intervened in that space. So consumers have seen benefit and advantage. As I mentioned, it's always a trade pipeline, but they have seen advantage benefit coming in. There are very few elements of the portfolio where we have done price increases. That is limited, I would say, to a portfolio called HFD, by and large, health food drinks, where milk prices, cereal, barley, those materials, soft commodities as I call them, agri materials, we have seen prices of those commodities going up. And hence we have taken price increases in that.
I want to really understand, are you looking at passing on more? Can we expect more price cuts going forward?
Large part of price cut, I would say we have started invoicing, we have put in the market, but as I mentioned, it's always a trade pipeline. By the time consumers experience that, it takes few more months.
Correct.
So we have done large part of the price decreases because commodities have come off, but consumers should take, in my view, a few more months for them to fully experience the price cuts that we have done.
Right. So consumers will start seeing a slight reduction in prices
That
going
is right.
ahead,
That is
definitely. What's the margin expansion outlook also looking like now? Is it safe to say that the worst of margins is behind us? And in that sense, what's your outlook on operating margins going ahead, and also for gross margins? Do you think we'll reach the 50% plus levels in the next 2 to 3 quarters?
Yeah. See, Shilpa, margins, there are different kinds of margin which are relevant to focus on depending upon the economical cycle and commodity cycle that we are in. At this point in time, the most important element of margin is gross margin.
Yeah.
Which is simply your sales minus the cost of making materials and products. That's the gross margin. And then of course from that you reduce your overheads, your A&P expenses to come to EBITDA, for example. At this point in time, the focus remains on gross margin. If I talk about Hindustan Unilever, in last couple of years' time, given the high amount of inflation in last 2-3 years time, we have dropped 600 BPS off our gross margin. This 600 BPS gross margin got dropped because of the point I mentioned earlier, cumulatively last 2 years, 30% inflation in commodity cost. Against that, we took 18% price. So 12% price versus cost gap. That had a tell on our gross margin. Now, good news is with a good job done continuously in the business on savings, driving savings across all the lines of the P&L, and commodities coming off. In the last quarter that we declared results, we had 9% net material inflation, we had 7% pricing. So a more than 1,000 BPS of price versus cost gap came down to 200 BPS of cost versus price gap. Our own gross margin, which had taken us 600 BPS hurt, has improved in last 2 quarters by 300 BPS. So almost half of the total margin decline that we had seen has come back, 300 BPS. Further, of course, job to be done in gross margin, which is why gross margin becomes an extremely important margin line to focus on at this point in time on the business cycle.
Right.
Once gross margin recovers, the first job to be done is to keep investing behind competitively on advertising and sales promotion. If you see again sequential last 2 quarters, we have added 160 BPS more investment in the lines of advertising and sales promotion. A, because the media heat is going up, and of course at very high inflation levels, the whole industry basically was making choices of where to put money. And hence the first job at Hindustan Unilever that we focused on is to give the right price value equation. This is where the investment goes. And the second investment goes is in terms of A&P. And which is why, as mentioned, 160 BPS we did increase in last 2 quarters alone. And then after that, net margin becomes a consequential conversation. You drive the right amount of gross margin, invest competitively behind A&P, and of course, net margin is an outcome. Our margin where we are today, even if I look at last few quarters, more than 23%, we do believe it's a very healthy set of margin. And at this point in time, the focus will be volume growth, the focus will be gross margin, focus will be maintaining competitive price value equation, and focus will be investing in advertising sales promotion. And we've spoken consistently in the past as well. Our principle for A&P is share of voice ahead of share of market. That principle remains across the business cycles.
Right. But I'm still trying to understand like a rough timeline if we were to look at, while I understand the current, you feel like the current levels are healthy, the 50% plus, do you think it's achievable given the trends that we're seeing currently?
50% meaning the gross margin?
Yeah, at the gross margin
level. At the gross margin level. Absolutely, yes.
In the next 2 to 3 quarters?
No, that how much quarter it takes is a point of conversation. Remember, when you end up doing price correction, that impacts the line of gross margin. And hence the price value equation for next few quarters, it will remain volatile across commodity categories and hence across product categories that we end up selling. But yes, everything else being equal, we would love to go back to that level of gross margin level.
I want to come to talking about categories specifically, and the first one is I want to talk about food. Now, the Nielsen data that came out, Nielsen IQ data, that the latest data that came out suggested that food was a category that drove growth, right? But for HUL, it was a slower growth in terms of 3%. Would you attribute that, I mean, what would you attribute that entirely? During the results, you spoke about a slowdown in the tea side of the business also, but why is the food aspect then still a little slower?
Tea is a market in which we have seen downgrading, which we did not experience in other part of the portfolio. And why that happened for tea was tea as a commodity, there are 2 different kinds of tea, if I may just broadly simplify. There are premium teas, we buy a large portion of our tea using premium tea, and there are plainer teas, which are low quality tea. And in the crop which was produced last year, there's a good production which happened overall for commodity of low price, as I call plainer tea. And hence plainer tea prices came off much more than the premium tea prices. So the long-term equilibrium, the price gap between plainer tea and premium tea, that increased. Overall tea growth, and hence tea growth got impacted when there's no price growth. And we saw downgrading happening overall in the tea category. So our tea business basically was exposed to that reality in last few quarters as I speak. The latest quarter results, we had a small value decline. We had 3% tonnage increase. And mix overall, of course, had to follow the trend of downgrading in the category. HFD, we've been speaking at length, which is the second component of the
Yeah.
two-third business I spoke about. Pandemic impacted, inflation impacted. So we've seen two large impacts which we have seen in a discretionary category like HFD in last few years' time. The rest of the business, which is the one-third business comprising of ice cream, coffee, foods, pretty good, I would say, portfolio, the way we have seen growth. Our foods portfolio has grown pretty well between Kisan Jam, between ketchup, between mayonnaise put together. Ice cream for March quarter did get impact. March month was not a good month from a temperature perspective, from a weather perspective. All of us are aware of unseasonal rains that it did impact ice cream sales. We had a fabulous year last year of ice cream in season. Of course, we will speak about it, what happens in June quarter as we announce results in July when we have the full season impact coming in. Coffee has seen pretty material inflation. Our business has been growing in double digits, but coffee has seen material inflation on commodity, which again then has a tell in terms of consumption of overall category in the market.
Just a word on home care also.
Sure.
Just wanted to understand there also now going forward. I mean, summer's also usually one season where you see an uptick for that particular category, especially. I wanted to understand going forward, what are the trends that we're seeing and what do you see driving growth really for home care? That's another category also according to industry data that has been performing really well. What have been the drivers behind that growth?
Last year we had very good growth as HUL. And the growth was driven both by price because of the inflation which happened in the economy. It was also driven by volume. We had near double-digit volume growth last year in home care category. And the reason why we had such performance which outpaced market significantly is because of the portfolio that we have developed over the last many years in home care space. Today, more than 3,000 crore is the amount of liquids portfolio that we have in home care between what we sell as laundry liquid in Surf or Comfort in terms of fabric conditioner or for that matter, Vim liquid. Equally, if I look at the premium and the mass component of our portfolio, today premium portfolio is a larger portion of Hindustan Unilever's portfolio compared to mass. And that's the journey that we have developed over the last 1 decade. And hence that resilience is built in. The overall point I mentioned earlier that during the period of high inflation, we have seen that premium portfolio has been more resilient. And we have that tailwind in our home care portfolio, which has a higher contribution from premium. And that tailwind has helped us to outpace market significantly last year.
Right, and now do you see the mass part of it also really growing because we're going to be, I mean, because you spoke about passing on benefits of the lower commodity prices for the laundry category also. So now do you see, while premium is resilient and continues to grow, will the mass part of it also really grow then? And sort of what is the kind of growth that you're looking at over the next couple of quarters?
Sure. So there are 2-3 dimensions, Shilpa, out here. First of all, the headline growth that we had for home care was also driven, as I mentioned, by price. That price component, the overall conversation that we had will tail off. And similarly, the price component, the price growth component for home care will also keep reducing. And hence total growth will be lower compared to what we had last year. The level of outpace that we had against competition last year was unprecedented. Will we keep growing ahead of the market? That's absolutely the intention of the business. But the scale of outpace will be very different compared to what we had last year. This was also the period I mentioned last year, the trusted brands got larger share of the business. As commodities overall have started to come off, we'll see more players coming in the market. Many players found it very difficult to run their business model with so much amount of volatility in the business. We will see those players coming back in the market. So overall, the distribution of market players will be a little different in current year compared to what we had last year.
Great. And, coming back to talking about the larger business, I want to talk about M&A also. We've seen significant, and you did talk about one category that was very important in terms of the healthy snacks and the nutrition department where you had Oziva and these acquisitions. Going forward, are you looking at more in this space itself? Are you looking at other spaces? I just want to get an idea on, what's the M&A pipeline for you looking like? And I want to understand, is it going to continue in this space or are you looking at new spaces?
Yeah. So the way we look at any M&A for that matter is always from a category lens and a demand space lens. What are the demand space in which we are present and how do we see demand space evolving going forward? And once we have a point of view that we do see demand space evolving going forward, we then start thinking, shall we launch our own brand? Shall we bring a brand from the stable of Unilever? Or shall we go on for a bolt-on acquisition? So there are all options on the table. Health and well-being is a category that we entered, as I mentioned a quarter ago, by taking a majority stake in one brand, Oziva, and a minority stake in Wellbeing Nutrition. With that, we forayed into health and well-being. These are the first two brands that we are basically entering the category into. But equally, we'll keep evaluating. There are some fabulous brands we have in the global stable of Unilever, and as they become relevant for consumption in the country, we'll bring them.
Right.
The spaces in which we want to operate, health and well-being, is a space where it comes on gut health, it comes on overall inner beauty, it comes on protein. Those are the spaces that we want to operate in vitamin mineral supplement space in health and well-being. So that's definitely a category we do see as India is getting more affluent, overall consumption needs are changing, a heightened amount of awareness in consumers of a balanced nutrition. These categories will start playing a larger role in overall health and well-being of people, and hence the foray into health and well-being. Equally, when I look at beauty and personal care overall and beauty space, again, where we do see a space of masstige price point, and that's the space within beauty which today is getting more excitement. And masstige is something which is more than premium. So when I talk premium is 120 plus price index, but masstige starts 250 plus, for example. And in that segment of the market, though it is niche and small today, we do see market basically growing very well in that space. And which is why then we launched 5 different brands in that space. When we launched 5 different brands, it was a mix. Some brands we created from scratch in the country using our agile innovation capabilities, a brand like Acne Squad, a brand like Novology. But equally where we did have crafted fabulous brands in the stable of Unilever, Simple, Love Beauty Planet, Baby Dove, then we got from the stable of Unilever.
Yeah.
But equally there's a fabulous brand externally which we think adds and can do a good job with our portfolio. We're always open for bolt-on acquisitions as well.
Right.
But one has to be very mindful that you only acquire when you can create more value.
Not only are there D2C brands, but also larger companies like Reliance, for instance, has entered the space, and they have now launched brands in all the categories that you're present in, and they are going for the USP of having lower priced brands, and across categories they've launched. How do you view the competitive scenario, and do you think this will trigger a price war, or sort of like, I mean, how do you see the competitive landscape changing?
See, there are 2 large elements of FMCG market, important to understand. First of all, $46 per capita consumption. A huge runway for growth for overall market to develop. So market has enough headroom, enough headspace for multiple players to coexist and create value. That's one reality of FMCG market. And which is why in India, FMCG is not a zero-sum game. From here onwards, the way I see the intensity will continue, but there's huge value to be created. Now, one of the points I keep talking about that, yes, we do focus on competition, but our obsession is on consumers. What can we do with our consumers to ensure that we bring best in the class products for consumers, products which are superior, more demand spaces we can enter into, and do a good job with our consumers. In long run, that's the dividend we'll get as a business.
Right.
Now, coming to Reliance, we have a fabulous relationship with Reliance. They are our suppliers of key ingredients. They're also our customer. We have a fabulous relationship with them. And as I mentioned to you, any competition is good.
Right.
And competition has always got best out of Hindustan Unilever.
Right. Wonderful. I think that's about it from my end, Ritesh. And these have been wonderful insights, in fact, not just about the company, but about the overall industry as well. Thank you so much for taking the time out.
My pleasure, Shilpa. Thank you so much for having me here.